Okay, I'd like to bring the audit committee meeting for the month of January to order. Do we have any public comments? Hearing none, seeing none. I need a motion to approve the minutes of November 26th. Can I get a motion? Second, all in favor? Any against? Carried. Okay, the audit committee work plan, it's in your book. The audit committee work plan has been tailored down to fill up our four meetings this year.
Yes.
And we've covered pretty much everything that we need to cover within those four meetings. I think we had to be a little concerned about the interim financial statements when they came out, make sure our meetings somehow jive with that. Next on our list. Okay, next we have Dave Jones going to report on our third quarter 2012 financials.
Good morning.
Good morning.
I assume I don't need to introduce. I think our team's well known to you.
Well, we've got limited time too.
Oh, okay. Well, I can do this. You know, we have completed our review of the financial statements for the authority for the quarter ended September 30th of 2012. You know, as you know, a review of the financial statements does not constitute an audit. It is basically procedures that are related to analytical type of procedures, discussions with management, and some limited auditing procedures in areas where that we think probably warrant some issues. With this quarter, there's really nothing that is really significant. The only thing I do want to report to you is that there is a note that begins on page 98, and it basically deals with, you know, a significant event that occurred subsequent to the end of the quarter, dealing with a storm. And we have, during this process, we have spent a good bit of time beginning the process of looking at the storms and the impact that would have on the financial statements, and working with management to make sure we're kind of deal with that sooner versus later, so that none of us have any surprises to deal with that. So that process is continuing to move. We'll spend a lot of time with it. We'll spend a lot of time with management. But I did want to point out to you that there is there's a new disclosure in the financial statements regarding the storm. I'd be glad to answer any questions.
When you say you're looking at all aspects of the storm, are you looking at lost passenger revenue as well?
Well, we're looking at that will be a part of it. I mean, we're looking at the impact of the storm on the financial statements. I think so there will be. I mean, there's going to be some, there's some damage to assets, and there's some recovery, and there's some other financial transactions that have occurred and will occur as a result of activities around the storm and the rebuilding. And we'll continue to look at those and work with management to make sure we're dealing with the issues at the time versus after the fact. I guess that's the best way to say it. We've already had a lot of discussion.
So my question is that management has worked with our auditors in coming up with possibility for reimbursement from insurance companies?
Yeah, what we've done is, in fact, we had an extensive meeting yesterday to go through and first just to identify what the financial accounting standards would require us to disclose, what that implication is on things like tri-borough surplus distribution and how that gets handled. How we need to disclose it, as we have been for for disclosure for bond documents, but also disclosing in a way that we think will further help us in terms of our negotiations with the insurers, in terms of what we're trying to do. And again, looking at both the casualty losses and operating losses and the revenue losses. So there's a lot that's going on, and we're trying to just make sure that, again, our disclosure is accurate, complete, appropriate, but that it's being done in a way that does not in any way compromise our negotiations with the insurance companies to receive full recovery. And again, with so many moving pieces, and I would also have to say with definite destruction and the issue of impairment, which is an important point, we don't know how some of our assets have been damaged. We know there's probably a shortening of their useful lives. There may be destruction or damage that will not be realized until sometime in the future. So we're just trying to make sure that we can properly disclose this way, again, because we have to do this for all the bond issues that we're doing, but to do it in a way that's captured by David in his report to you on our financial statements, but also does not compromise our ability to negotiate with the insurers to receive the full coverage that we think we're entitled to. So I think
It's actually a very complex process, because there's so many pieces to it. There's so many aspects of funding and all of those issues, are dealt with. And Bob's right. This issue, having dealt with this in the past, in other circumstances, similar issues with other circumstances, it will evolve. But more information will become available, and better information will become available with the passage of time. So it's that issue will continue to refine itself.
Mark?
I'm sorry to come in late, but I would just like to sort of emphasize what you just said, that I think that the state of information that we have as a practical matter is by nature incomplete and will be for quite some time. We're going to be finding out what went wrong and what it's going to take to fix it and how much to value it at over at least months and months and months, quite honestly. So that I think one needs to be a little bit careful not to get committed to the definitive word, because quite honestly we haven't got it.
true.
Okay, just a couple questions, Dave. I know that New York City Transit Payroll went on live at the BSC, and my question is, doing your work on this interim financial statement, how did you find that, and where's it gonna lead us at year end?
We really haven't begun a detailed testing on it. Do we look at it? The answer is yeah. But we haven't, we've looked at the process, but we haven't tested that process yet. Meaning we haven't looked at individual transactions that's run through the system, but we've had discussions about it. We understand the process. Before we begin, the detailed procedures, we will do some testing.
Yeah, push your microphone.
Oh, I'm sorry.
Okay, I have questions here. The other thing is on page 8, there's an estimate based upon December 2011. And it said, due to timing change and estimate, decreased headcount, etc. The question I have there is that you've had this same change in all 3 quarters. The first quarter, it was a $44 million decrease. In the second quarter, it was a $128 million decrease. In 2012, it's a $56 million decrease. Now, I guess my question is, how does that keep changing?
This is the MD&A. I'm trying to find it.
Well, it's on the top of the page. It's basically relates to the transit authority. So
I guess my question is in 3 quarters, it's been 3 different numbers.
Right.
You would think that after that first quarter, would have had
That
a
it would
handle on
settle down.
December.
Right.
And we wouldn't need to change that estimate each quarter we were.
But it's a change in the accrual, it's not a change in, where we get
Correct.
bothered is where there's a change in the actual amount.
Cost.
This is basically an accrual of expenses,
So the accrual has to do with,
Amount of payment.
No, it's just days, so,
Timing.
I mean, that's gonna be there. That wouldn't bother us nearly as much if there was just a change in the actual expense number, but it's a change in amounts that are accrued, so it's a timing
Timing.
issue.
so in other words, if the quarter ends on say on a Saturday or a Friday, then you've got to accrue Monday, Tuesday, Wednesday. So depending on how the quarter ends, the accrual will either be, larger or smaller. So it's really a timing of how the quarter ends.
Okay, I can
it-
understand. My question is that you come up with an accrual as of December. And that's got to be for December, the accrual. How can that change as you go through 9 months?
Well, they're making the accrual at the end of every quarter. So they're truing it up at the end of every quarter, so it's an
Actually,
accrual.
we-
So it's really not just a December 2011
It's not December, it's
accrual.
every quarter.
Actually, the system accrues every month,
Right.
depending on how the month
Right.
ends.
That's the,
Jim, they're comparing
That's the
it
answer.
to December 2011, that's the
okay,
flux.
that's the answer. Okay.
Right.
I know we just talked about the storm. Do you foresee any very large estimates that are going to be part of our financial statements or any accounting rule changes?
No,
that
there's
will
not any
affect
real,
us?
obviously, there's gonna be, I mean, to Mark's point, there's gonna be a good bit of making some assumptions regarding certain things that will refine as time passes. But as it relates to big assumptions that appear in the financial statements regarding market valuation of investments or the hedging activities or estimated lives of there probably will be some change in estimated lives of assets based on some of the things that we're hearing. We don't know yet.
Okay.
There could be some of those, but absent storm related issues, I don't know of any.
Mr. Chairman, it might be helpful for the committee if David were to talk about how this is going to be treated, because it's not, as you would think, an extraordinary item as an extraordinary loss. It is an extraordinary event, but the accounting regs do not treat this as an extraordinary loss. And I think it might be worth just a minute or two to just describe how this is going to be reflected in our financial statements.
Yeah, once upon a time, there was this, it actually was before September the 11th. Generally, events such as this would have historically, people would have said the readers of the financial statements need to be able to see the impact of a pretty material, unusual event in the financial statements, and there were rules regarding the use of what they called extraordinary accounting, and it would be separate, and it would have been shown below operating amounts, so it would be, it wouldn't have impacted operating income. At September the 11th, the SEC and a number of people looked at the events of September the 11th, and by the way, September the 11th was they issued a pronouncement. It will not be accounted for on an extraordinary basis. And since then, the use of extraordinary accounting has basically gone away. So a thing, if it is a foreseeable event ever foreseeable, not just every 100 years, but if you could foresee that there was going to be a hurricane on the East Coast in 100 years or 1,000 years, then it would not be considered to be an extraordinary item, and it would flow through income. So what will happen on the financial statements of the authority is that, there's, by the way, a lot of the cost related to the cleanup and the incremental cost of overtime and whatever, that's already in your financial statements. You may receive some some funding and some insurance proceeds, and the accounting literature basically says to the extent that you have a contract in place for casualty losses, and you can reasonably estimate the return, and it's probable of the return, then you get to use those amounts to offset those costs. So we'll be looking at that. As it relates to fixed assets, what happens in the accounting literature, and there's a little difference between the world of accounting and government versus the private sector on this issue. But what happens is that you look at the asset, and if you conclude that the asset is impaired, beyond is unrepairable and it's impaired, then you basically take the book value, which means the cost less the amounts of depreciation that have previously been taken, or the accumulated depreciation, which results in book value. Then you look at the book value net of insurance proceeds,
Or federal reimbursement.
or if there's a contract for a federal reimbursement, right?
Okay,
I mean,
if
there's a
federal
contract.
reimbursement net of federal reimbursement.
So for the asset, then you would basically, show either a gain or a loss in the financial statements.
I think the point I'm trying to get through is, to the extent that we have casualty losses, we're going to write off the net book value of that, and it goes through the operating income statement. It's not a below-the-line extraordinary. It is hitting, our operating statement. And as David said, if there's a contract for insurance reimbursement, we can net it against it. The issue that we're discussing, which I think is important, if there's federal reimbursement, which we now know will happen because of the legislation that was passed by the Senate, it's a question of how much and when can we net that against it. And so that's an issue that we are still discussing.
And it's a form.
and
Some of
talking.
it's a form. That's a form-driven type of event.
But the point I'm making is the operating losses that we suffered are reflected in the financials already. The question now is determining what the write-off of the assets or the impairment loss will be. And as Mark said, that's going to continue to be, that information is going to continue to come in over time as we revise the estimates and such, just as the reimbursement will be recognized over time. So, Mr. Chairman, in terms of numbers that will change, this is definitely going to be a number that will change, and you will see this changing number as we get better estimates of what our true losses are and a better estimate of what we will receive, not just from insurance by signed contracts, but by FTA or FEMA reimbursement.
Okay.
And on that issue, I don't quite get it in terms of you're recognizing the loss unless you actually have a contract in place that in effect gives you a receivable that you can balance it with. I think that the expectation on, I don't know how the FTA works, and I don't know how FEMA works exactly for you, but certainly in terms of the city's assets, the expectation is that within kinds of damages that qualify for FEMA reimbursement, ultimately we will in fact be reimbursed by them. And quite honestly, although the recent appropriation is lovely, there's a very established pattern of if you qualify for FEMA reimbursement, and it takes a good deal of bureaucratic shuffling project by project to actually get the commitment, but ultimately the feds will pay, and they will appropriate whatever's required to do that, whether it's this year, next year, or several years from now if you're talking about capital rebuilding. And I don't really understand, if you have to recognize the loss in 1 year with an expectation that the bureaucratic grind actually will ultimately give you money from the feds, you're going to have an extraordinary loss. Well, maybe you don't call it extraordinary. You're going to have a loss in 1 year, and then you're going to have this weird revenue the next year or the year after when we finally get through the fine print, which strikes me as an odd picture to present.
It depends on the form of it. We have to look at, that's what I'm saying, we need to look at the form of it and see what it is. Although unfortunately, Mark, there is accounting literature on point, so, we're bound to that. So, one of the things I've said is maybe we can, have some discussions relative to the, the process of coming up with this, and maybe the authority can have some impact on the form that those things take, with the
But
accounting knowledge.
in any event, we wouldn't get a 100% reimbursement from FEMA. We'd be more likely 90, wouldn't it? Maybe we're lucky.
From FEMA, maybe it's 90, but hopefully by the time the dust settles on all the categories of stuff that the feds have appropriated, some of which is already spent, but some of which actually has to do with us. I mean, at least the city is maintaining the hope that at the end of the day we'll be covered, not just by the FEMA, what we think will ultimately be 90%, no, by other dribs and drabs of federal money. I don't know how you're allowed to put the FTA against the loss on the FEMA side, frankly, but things of that kind.
Hey, Mark, I have a question because he's raising a good point. I mean, it's something we all want to know. Is there a direct appropriation? See, because the rules get the rules are very different when you get a direct appropriation.
Direct appropriation from FEMA for what?
No, a direct appropriation from Congress to the city or to MTA. Not really.
Here's my understanding is basically
That you need to.
if I can, Mark, FEMA money goes to the state. We then have to go to the state to get the money. That's how FEMA works, and we have been told that FEMA, if they even move with great speed, will send the money to the state, but it's up to the state then to distribute the money. That's also, there's a difference between repair and restoration and mitigation. Right. Mitigation money may just be a grant, and to the extent that a grant will be treated differently in terms of how it hits our financial statements as opposed to monies that can be netted against the losses. So I was really just wanting to set the stage that this is going to be jumping around, and we will see numbers that will again be going up and down, back and forth, and so we're doing the best we can to estimate our losses, and we're doing the best we can to try to figure out what receipts we will receive and the nature of those receipts. And as David was alluding to, the way that the receipt is given to us will determine how they account for it, or how we account for it, and then they sign off.
Yes, but if we're talking about how you're going to represent our circumstances in our financial statements for the year ended last December, the fact of the matter is the storm happened, so the damage happened. And I would respectfully suggest that you ought to be looking at a very substantial receivable from the federal government as the offsetting entry, even if you don't have an exact contract in place for that particular 100 yards of signals that got zapped. Because the fact of the matter is you won't, but is it realistic to pretend that we have to come up with the bucks, at least as an accounting matter, to cover that damage, when I think that there is a really quite decent expectation that ultimately we're not going to have to do that?
Mark, I understand. I do understand. I'm very understanding. And we work with the accounting literature. Unfortunately, there's an accounting literature, and there are some rules, and the form of how these things take place do impact it. We have to follow the accounting rules. We do. But I understand, totally understand what your issues are. I do, and we're trying to be helpful.
Okay, one last question outside of this thing, and that is, what is the impact on our 12/31/12 audit of the payroll mobility tax litigation?
We by the way, we've been watching that for a number of years, and and we get, we basically talk to counsel and understand, that there's conflicting judicial opinions on this. Right now, we're basically given the state of it, and basically based on the advice of of council and the information we receive from council, you know, there's nothing to do other than to disclose the litigation and the various forms of the litigation and the various opinions in the notes to the financial statements. But as it relates to the numbers, we're not, you know, we're continuing to basically, the authority's continuing to recognize those amounts in the financial statements, and we look at what the circumstances are around it, and we don't have any reason to believe that that's incorrect.
Any other questions? Okay. Next thing on the agenda is the 2011 pension audits.
I'm going to turn this over to
Okay.
my colleagues.
Morning. I'll go quickly because I know you said you had a short time frame here, but we've completed our audits of the pension plans. I'll just go through the names of the plans. Metropolitan Transportation Authority Defined Benefit Pension Plan, the Metropolitan Transportation Authority Deferred Compensation Program, the Long Island Railroad Company Plan for Additional Pensions, the Metro North Commuter Railroad Company Cash Balance Plan, and the Manhattan and Bronx Surface Transit Operating Authority pension plan. I'll just, through my comments, refer to them as the plans collectively. So we've completed our audits of these plans as of December 31st, 2011. We did our audit in accordance with generally accepted auditing standards. Those standards and the responsibilities, our responsibilities, management's responsibilities, were detailed in our engagement letter to the MTA on August 29, 2012. We conducted our audit in accordance with GAAP. Those are the accounting rules that we follow, generally accepted accounting principles in the United States of America, and have rendered our opinion based on those rules. As part of the audits, we did look at internal controls. However, we did not, like you're required to with public companies, issue a separate opinion on the internal controls, but we did look at internal controls for purposes of planning our nature, timing, and extent of our substantive testing that we did on the plans. Counting estimates. Counting estimates are something that's, you know, every set of financial statements has some element of accounting estimates. The plans were, you know, no exception to that. The more significant estimates that were utilized in the preparation of financial statements are the following: the determination of the fair market value, the annual required contribution, the ARC, that is referred to, the actuarial value of the assets, the actuarial accrued liability, were the more significant estimates. Now, there were not any changes with any of those estimates or the methods by which those estimates are determined, and management's judgments in deriving those estimates. With regard to uncorrect and misstatements, there were no uncorrect and misstatements identified. Material correct and misstatements, there were no material correct and misstatements that were brought to our attention. Significant accounting policies, these policies are described in Note 2 to each of the plan's financials, and basically there were no significant changes with any of those policies last year to this year. As far as disagreements with management or cooperation with management, we had no disagreements. Management was very cooperative for each of the plans. Not aware of any consultations with other outside accountants on accounting opinions or anything of that nature. Attached to the letter are the representation letters, the management representation letters. They're marked draft, which I guess after today will be finalized, right? But these letters, I'll just say, are standard. With every audit that we do, we request a management representation letter. The form of these letters are similar to the template that we use with other clients. There's nothing that really is unusual, I'll say, with these letters. That's all as far as my prepared remarks. Are there any questions or comments?
Okay, we have any questions or comments regarding the one note I did notice that the percentages used were decreased from 8 to 7.5% on the audits and on the estimates. And I think that's appropriate.
That's the actual.
The discount rate.
Discount rates
Yeah.
decrease, yeah.
Any other questions? I need a vote to accept pension audits. I got a motion. I need a second. All in favor? Any opposed? Carried. Okay. Yeah, we have to go back and vote on the interim financial statement also September 30th. Get a motion to accept it as it's been second. Any opposed? Carried. Okay. Sertoa.
We have Mike Mantell and Stefan Montgomery, who operates Satoa, here today.
I guess we really want to make sure that Sertoa is moving along in a manner that's not going to hold up our December 31st audit in any way.
Simply put.
And also how the accounting function is moving into the New York City Transit, and if that's worked out, and where we stand with it. So
Well, good morning, everyone. My name is Stefan Montgomery. I'm the Vice President and Chief Officer for Staten Island Railway. As we know, last year we had some financial problems in completing our financial statements, but I can report to the committee today that the September 2012 balance sheet and P&L has been completed, and all the information has been included in the September consolidated financials that will be issued to Deloitte. As regard to timely submission of audited statements for the calendar year 2012, we don't see any difficulties whatsoever. So Satoa will be in conformity with MTA year-end calendar deadlines. So what we've done basically is we have taken all the accounting functions. You may or may not have known that all the accounting functions were done in-house. We decided after last year to transfer many of the accounting functions over to New York City Controller's Office. In the last year, we have completed that transition. Many of those functions are being held by them. We have a skeleton crew right there to handle the accounting functions from the day-to-day operations.
Stefan, you said New York City Controller's Office, you mean New York City Transit, and with
New
Mike
York City
Mantell.
Transit Control. Yes. Transit. Yeah, he got a little nervous, right?
Mark doesn't want to do it, right?
Transit, my mistake, excuse me.
I guess the question is, how do you think the transition's going? Is it,
I think it's going well. Mike, you want to?
Yeah, let me address that. The Satoa Group is under my domain now, down in the Controllers Department at Transit. Okay, we've created a unit. It's a 4-person unit. They've worked hand in hand with Mike Facilities auditors to get through this period. Okay, and they've done a really wonderful job. I've been able to hire 2 deputy directors who are coming in to work with Satoa. We're helping Stefan train the person who is going to take over as the liaison with me, okay, at Satoa. We see no difficulties going forward. And what we had to do, and this was a pretty complex task the last 6 months, we had to literally construct all the transactions since January 1st of 2012. And we have been able to do that. We anticipate having the numbers, the financials all ready for David and Deloitte to audit by the end of February.
good? Dave?
Yeah, we've looked at it. We've looked at what they're doing, and we don't see any issues. The process is better controlled.
Good. Andrew?
Do any of you have any estimate how much fare is being because of non-collection between Tompkinsville and Tottenville?
No, I don't want to. I don't want to give you a number right now, but we know that there's a lot of fare being lost.
I'm sure there is, and I know there's been, Commissioner Capelli has told me there's been police activity because of people riding, and not paying. And at some point, we have to consider either onboard inspections, as Hudsonburg and Light Rail does, or some gates somewhere. I mean, it's crazy. That's the only place in the entire MTA system where people aren't even expected to pay a fare.
Yeah, and we are in the process of looking at that. As you know, with the Eagle team, being on the select bus service, one of the things that we're possibly looking at is doing the same thing on Satoa.
But you would have to have the readers like the Metro North conductors have.
That's exactly right.
And they'd have to be adapted for a Metro card, obviously.
Right. But you can also use if the select bus, puts your card in, you get the receipt back. If you have somebody on the trains, like the Eagle team, that would give us some revenue. And it would
So you'd
be a
have to put
short-term.
the machines at the station so
Yeah,
they could
right.
get a proof of payment.
That's right, and
Yeah.
they're wireless too. And since they're wireless, it's easy to
Yeah,
install.
yeah.
So we're looking at that.
That's good.
Makes sense to have some sort of a turnstile, if you will, where the bus driver sits?
Where the train
So-
operator sits?
Where the train, no, I'm focused on the bus for a moment.
Okay.
Would it make any sense to have a turnstile there, next to the bus driver? You don't need a full equipment, you just have something to slow people down.
Yeah, but I don't
You
have
think-
buses. We're talking about
This is
rail.
all rail.
Those aren't you.
That's not me, no.
Then how about having some other security device to stop it on the trains?
It's an open system. There's a very big difficulty with putting turnstiles because it's an open system. It's really, really difficult. Because they've examined that in years past, and it would just, the amount of money that we would have to put in is a lot. The select bus, how they do a select bus is really the best way to go about doing this.
Provided the Eagle team will actually be able to go on the trains and randomly inspect.
That's exactly right. Otherwise, we're back to the old way. So it's something we're working at. We're looking at. Vinny's DiMartino's team is out there, and we're looking at that now.
Mark?
I would observe that there's a degree of expectation that New York City is going to pick up the operating deficit for Satoa, and this issue is one that concerns us intensely, as a matter of fact, because if the operator is unable to charge fares, I mean, there's a certain question that some asked, why should we be paying for that incompetence? And I realize it's not just incompetence, it's much more complicated, but still, I mean, it's an issue.
Is there any timetable set on the part of your agency that is to report to this board as to what steps it can or will take?
No, there's been no timetable set, but we can. I'm sure we can get you one. I sure will.
Okay, any other questions? Okay, next on our agenda is the overview of the new MTA Financial Statement Consolidation Initiative. David, I think it's about 9 years ago, you and I talked with Katie Lapp on this. I saw this and I said, finally.
Is our O&B department, the TAs, you find out, work up some figures on lost fares or anything like that? Who's been working with you?
I forget who it is, but there's numbers out there that I thought. It's about 30 million pounds.
Okay, all right. Okay. Yeah.
Doesn't work. It was working.
On 45 minutes ago.
Doesn't work.
Depends on your point of view, is whether you think that's good.
It's coming.
Malfunction of this. Yeah, you're right. The bulb went out. The bulb went out on that one. There it is. There it is.
All right.
Okay, okay, good.
Progress. Yeah,
That's why you have. Yep, okay. Okay, just prepared a little presentation just to give the committee an update on the progress we're making with our new PeopleSoft ERP system. So just, as you know, we went live in January of 2011 with the new PeopleSoft system, and we're finally at the point now where we've automated the consolidation process. So just like to give you an overview of that and see how that's working. The current process up until now is basically, it's a spreadsheet process. So each agency prepares a summarized Excel spreadsheet, and that is sent into headquarters accounting by email. Headquarters accounting then prepares a consolidated master spreadsheet, and then on that spreadsheet we manually do the intercompany eliminations, we do the consolidations. It's very time consuming, it's prone to errors. Spreadsheets, they work, but they're not the most efficient way to do a consolidation, especially now that all the agencies are on one accounting system. So what we've done is we've been able to use the PeopleSoft system. So now the process that we're going to be using for the next fiscal year, for 2013, is we're going to be pulling the data directly from the PeopleSoft system. So the blue box on the bottom is basically the PeopleSoft ERP system, and we will be pulling directly from each agency's general ledger. And instead of doing manual intercompany eliminations, we've now created elimination ledgers. So all of the eliminations will be automated. So they'll flow up to level 2, where we have basically a consolidation of the MTA and its subsidiaries. New York City Transit does a consolidation with MapStoa, and then TBTA, which is another affiliate, those will be, eliminations will be done between those entities to come up with the final consolidated MTA financial statements. So this system is now becoming automated. We're using the PeopleSoft tools called Envision. The new process is going to allow for more timely financial statements. Since we went live in the beginning, we did have some problems pulling together the financial consolidation data. So it'll also allow for better audit trail. No more spreadsheets residing on, one department's directory. It'll now be actually part of the official record of the MTA's ERP system. It'll allow for better control mechanisms. Allow for better review of the details that rolls up into all of the financial statement line items. Obviously, it's going to improve efficiency. It's going to automate the intercompany eliminations. Will allow for faster monthly closing. And we're taking full advantage of the PeopleSoft system, which we spent a lot of money to implement. No additional reporting software is required. It's pretty much controlled by the accounting group. We don't need very much IT support on this at all. So the next slide is a snapshot of the closing process. This is what the Business Service Center controls. So the Business Service Center, all of these modules on the left are all part of the PeopleSoft system. So we have inventory, accounts payable, asset management, payroll, accounts receivable, revenue. So what we're doing is we're monitoring the closing by each agency. Internal audit has been involved in working with the BSC on trying to identify where there might be backlogs in the closing process to see if it's a system issue or some other issue. So internal audit's been instrumental in working with us to speed up the closing where possible, identify where the backlogs are, And ultimately, we're looking to get the closing much faster and actually produce monthly consolidated financial statements. Anybody have any questions on it?
Come a long way, Dave.
Yeah. This is a good step for us in accounting, I'll tell you that.
Any questions, comments? Well, keep us up to date as you go forward.
Yep, absolutely.
So we can, when it's done, we can have a party.
Yeah.
Okay.
And I can also say this, the audit is very
Yes.
Well, you should be. But I remember the comment that you made when we met with Katie Lapp, and that was, unless it comes from the top, it's never going to get done. So it's 9 years to get here. So. Okay, Mike, audit services 2012 and the plan for 2013.
Thank you, Jim. Today I'd like to discuss our 2012 year-end results, audit results, and proposed 2013 audit plan. You see? We provided the committee, the acting chairman, the acting executive director, and agency management reports that summarize this information. As shown in this slide, this is the audit coverage provided this year to the MTA and was consistent with our plan. The challenge for us is to provide audit coverage at the 6 agencies and MTA headquarters based on a risk assessment of the activities and responsibilities, and to have the proper balance among the agencies and MTA headquarters. At each agency, we break down all activities into 7 business categories, and this chart illustrates how the time was spent. Procurement included audits of capital-funded contracts, such as the 2nd Avenue Subway, bus and subway car procurements, and the Fulton Street Center project. This slide is a snapshot of our results for 2012. I'm extremely proud of our accomplishments, and I'd like to thank my direct reports here today, as well as the entire audit staff. We made 397 audit recommendations across the agencies with a total dollar value and impact of $46 million. Our savings on the operating side resulted from such areas as revenue enhancements, audits of vendor invoices, expense reductions in health care operations, analysis of HR, human resource staffing, workers' compensation, among other areas. And we also follow up with the agencies to ensure these savings are achieved. On the contract side, our work is proactive, where we review cost proposals before they are presented to the board for vote, to ensure the lowest prices are achieved from our vendors and people we do business with. While identification of cost savings is extremely important at these times, we give evaluation of internal controls and risk assessment even more importance. Accordingly, such assurance work includes assisting with the implementation of New York City Transit Release 2 payroll, which we talked about here today, participating in the upcoming Release 2 implementation at Bridges and Tunnels, working on the MTA pension project to ensure the Release 1 agency's pensionable data is complete in the system, enhancing the controls, as you heard it today, at SOTOA in support of establishing better and timely financial reporting, audits of accounts payable and payroll at the BSC, reviewing controls over CPM administrative costs and overhead, and ensuring revenue collections, as we discussed, are maximized. At this point, I'd like to review with the committee our 2013 audit plan. We begin our planning process in September, and it takes us several months to complete, resulting in a comprehensive risk assessment, which is fully documented. The foundation of the audit plan was developed through a formal risk assessment that is performed in accordance with the Institute of Internal Auditors standards. These are the risk assessment sources from which we build our audit plan. All are equally important, and we obtain very critical information from them, such as the board reports, strategic plan of the MTA, impact of technology, our discussions with management requests on behalf of the agencies, and regulatory mandates, as well as financial data. Our role in the organization is consistent with top-performing audit departments throughout the country, found in the public and private sectors. While management is primarily directly responsible for internal controls, we serve as a critical preventive and detective measure to assist operating management, the board, yourselves, the compliance department, which Lamont Kearse heads, the external auditors, Deloitte, and our regulators, ensuring that MTA meets its mission. Our audits included opinion in the risk management processes employed at the agencies, including the effectiveness of management self-assessments of risk and remediation for identified issues. Our risk assessment methodology also addresses the role of continuous monitoring in determining and evaluating risk. While this chart shows our fiduciary responsibility to perform assurance and compliance audits, best performing audit departments are moving to perform advisory services as well. The shift was evident in the work that we performed this year at the BSC with the implementation of Release 2, paratransit, and in multiple task forces we participated on, giving advice on internal controls and best practices. The main objective of our risk assessment was to assure ourselves that the risks to the MTA in achieving its business objectives were fully defined and understood, that our universe of auditable entities addresses those risks, that no gaps in audit coverage exists. We solicited input from management, personnel agency-wide, and obtained their views on risk and key strategies. And in the past, we also met with Lamond in compliance and with David Jones and his staff with Deloitte to get their opinion on areas that we should focus on. The result of our assessment identified 351 audit activities at the MTA and its agencies. An auditable unit is a candidate for potential audit, which is ranked into high, moderate, and low categories. It is our goal that auditable units are covered based on a 5-year cycle. The results of our assessment, when applied to our resources, identified 160 audits this year that we will conduct. In 2013, we'll continue to identify cost reduction and cost savings opportunities through our audits. This will include reviewing operational areas and the capital program to ensure controls are effective and efficient. This is a preview of how we plan to spend our time in the business functions in 2013. These percentages have been reviewed with each agency president and have been agreed to. This is a preview of how we plan to spend our time at the agencies in 20. Oh, I'm sorry. Don't forget. On each category, you will see a snapshot of the types of activities in our audit plan. All of our audits will emphasize risk identification and the internal control environment. Key audits this year include validating the compilation of costs relating to Superstorm Sandy that you discussed about today that will be submitted to FEMA. And in the pension areas, strategic initiatives, and timekeeping, we want to ensure the integrity of these activities. At the agencies, we'll be involved also with facility reviews, operations, employee resources, and deployment, as well as key initiatives such as a smart card program, electronic tolling, and operating costs.
Mike?
Yes.
On the issue of service delivery under Fast Track,
Yes.
are you going to look at restoration of the service after the Fast Track?
Yes, the
10
complete.
p.m. to 5 a.m.
Yes,
period?
and the effect on that. Yes, we are.
Are you doing it for each particular instance of Fast Track, or are you doing it on a spot check?
We'll do it on a sample basis, but I see these as recurring audits that we'll do during the year and going forward.
Some of the ones coming in 2013 are going to be very different than the ones that have happened
Correct.
before. They're going to be in areas that are not mid-Manhattan, for
Correct.
instance.
Outlying areas, correct. Yes.
All right, thanks.
We'll do them all.
At the end of that, what will you be able, hopefully, to tell us?
That the program is working effectively, that service is restored as required, no impact to service or to the customer.
Will you be able to tell us whether or not doing this provides some economic benefit?
Absolutely, because that's the intent of Fast Track. That's the whole intent, to reduce overtime and to get more effectiveness out of $1 spent. Absolutely.
Will that effectiveness and will that be measured against
Past.
well, no, against customers' need to have the service between?
Oh,
Yeah.
absolutely. And the impact of those customers
Yeah.
during the time as well. A challenge for us is to keep our activities balanced within the MTA headquarters and its agencies that we provide audit coverage for. And amongst the projects we select, the balance should be between compliance and business improvement, and we believe that we will continue to maintain a balanced perspective. Finally, we will continue to coordinate activities throughout the year with the independent accountants, city and state controls office, the chief compliance officer, and also this year, this month, in fact, this week, we initiated a quality assurance review of our department, which is basically an audit of the audit department. Every 5 years, we are required under the auditing standards to have such a review of our operations to ensure our work is solid and can be depended on. And the audit staff is here this week. They already met with Jim Sedor this morning and with Susan and had some discussions about our work and met with agency management as well and looking at our work and our work papers to see how we do it. And once it's completed in about a few weeks, we will provide such report to the committee on the results. So with that, pending any questions, I'd like to request your approval of the 2013 audit plan.
Any questions? Mark?
Yes, Mark.
When you have this sort of development phase in terms of laying out your work plan for the year, which, I mean, on your description takes you several months to put together, to what extent when you're actually in a year, are you able to respond to specific concerns that come up?
Sure.
That you weren't thinking about the previous August when you were laying out your resources?
Just so you know, the history that we have, about 20% of our work every year is such work like that. So the audits that I'm showing you here, I allocate a plan up to 80% of our resources, so I have room to react to such things. Any changes to the plan, in case I get increased requests during the year, that's something so critical, I do call up Jim, and I provide this committee every 3 months and an update to tell you which audits I can do and which ones I have added. But absolutely, we do react to that.
As a matter of fact, one of the questions that they had for me this morning was Mike's role throughout the agency. And I told them that over the last, I would say, 5 to 7 years, it was hard to get our agency presidents to call Mike and more or less hire him to look into areas of their concern. Well, now that's a general thing. Mike's called all the time to look at this, check that. And that's really what the internal audit staff is all about, to help us within. He's part of the team. It used to be that anybody that was called an auditor, oh, stay away from them, don't ask them to come in. Well, it's just the opposite now. Now they call Mike when they got a problem because they know that he gets an independent view at it that they don't see.
And help address the issues as well. And I balance those requests to our plan, too, to make sure that, you know, what level of importance to the request versus what we have in our plan, too. And I talked to Jim about those changes as well. Can we get a vote?
Yeah, can we get a vote to accept the 2013 audit plan as submitted? All in favor? Any opposed? Carried.
Thank you so much.
Any other questions? Can I get a motion to adjourn? Second. Carried.
Thanks so much. Mark, thank you.